The Luna crash has irritated the cryptographic money markets, pulling down the cost for Bitcoin, BTC. Terraform Labs, TFL, and Luna Foundation Guard, LFG, auctions off their Bitcoin with an end goal to balance out the related Terra stablecoin. That has impacted opinion across the crypto space, as financial backers have answered the Luna coin news. Luna is important for Terra's double symbolic design alongside UST, which consumes Luna when UST is made and consumes UST when it is recovered, making Luna. At the point when UST unpegged from the US dollar on 9 May, UST reclamations enormously swelled Luna supply, driving the cost somewhere near close to 100%. Having exchanged at an unsurpassed high above $100 toward the beginning of April, the Luna cost fell in no time, plunging to $0.003385 on 12 May. Starting around 19 May, the Luna cost stayed level, exchanging at $0.001337. What happened to land Luna, and could the coin at any point recuperate the misfortunes? Here we investigate the land token value breakdown and how it affects the eventual fate of the cryptographic money. Comprehend the reason why Luna is falling so intensely. Getting a handle on the design and connection among Luna and UST is significant. What is Luna coin? The land Luna digital money depends on a trade work that keeps up with the UST coin staked to the US dollar at a pace of 1:1. UST is intended to constantly be traded for $1 of Luna. UST is a stablecoin, and that implies its worth is fixed to another money, like the US dollar. Stablecoins are utilized as a store of significant worth in computerized structure and permit holders to utilize decentralized applications, dApps, that sudden spike in demand for blockchain innovation. Merchants started to sell high volumes of UST throughout the end of the week. At the point when it unpegged from the US dollar, Terra holders began to reclaim it for Luna, which they then sold for government-issued money. This not just expanded the Luna supply and scaled down the cost, yet implied that Terra dealers started to get more Luna to reclaim each UST. That thus provoked dealers to short Luna. As the Terra convention limits the amount Terra can be recovered for $1 worth of Luna 60 minutes, holders started to sell it for US dollars or different resources on trades, further downgrading Terra against the dollar. The frenzy offering, comparable to a bank run on government-issued types of money, has driven up Luna's circling supply, which had developed dramatically to 6.5 trillion, starting around 19 May, from around 346 million beforehand. Its market capitalization plunged by more than almost 100% as the stock expanded and the cost dove. There are as yet 11.28 billion UST coins available for use, down from $18 billion worth before the accident. This implies that Luna is going through excessive inflation, assuming it will be feasible to recover each UST by any means, since there is near no interest for Luna, said Anders Nestein and Mads Eberhardt, senior quantitative investigator and digital money expert at Saxo Bank. UST isn't collateralized by something besides the market's conviction that Luna will continuously have worth to some, and hence consistently have intrigued purchasers, and this conviction is in any case firmly connected with the worth they see in UST. They include the experts noticed that the Terra establishment answered by purchasing $1.5 billion worth of bitcoins toward the beginning of 2022 to show some collateralization. This implies that Terra was abruptly exclusively around 10% collateralized in another exceptionally unstable resource, and because of the way that the establishment controlled the little collateralization there was, Terra was unexpectedly not unreasonably decentralized. They closed. The establishment's Bitcoin holding has spread the disease from the breakdown to other digital forms of money as it auctions off the Bitcoin, trying to keep up with UST's dollar stake. UST was esteemed at $0.08815 starting around 19 May. Will Luna recuperate? The Luna token is fundamentally used for administration and marking. In return for benefits from exchange expenses, clients take Luna to validators that record and approve exchanges on the blockchain. It has no worth other than its utilization to make and reclaim one UST. The Luna coin cost in United States dollars generally exchanged underneath $1 from its end-off in 2019 until it took off in mid-2021 with a more extensive cryptographic money market rally and the developing ubiquity of decentralized finance (DeFi) applications. The Land crypto cost outline shows that Luna exchanged up to $22.33 on 21 March 2021, however fell back to $3.94 during the May crypto sell-off. The cost took off throughout the late spring rally and sped up in November, coming to $103.33 on 27 December 2021. Luna's worth dropped when crypto costs fell in January 2022, sliding to $43.57 toward the month's end, however it bounced back to another high of $119.18 on 5 April. As per information from DeFi Llama on 3 May, the complete worth locked, TVL, in DeFi applications in Luna on the Terra blockchain came to $31.35 billion on 6 April. Placing it in the second spot behind Ether, with $122.73. Land has since dropped to 11th spot, with TVL dropping to $1.05 billion. Land's reaction to Luna breakdown. Terra was established in 2018 by Daniel Shin and Du Quan, with a plan to drive blockchain and digital currency reception by zeroing in on convenience and cost strength. Quan, CEO of Terraform Labs, was beforehand the organizer and CEO of decentralized remote lattice organizing startup Anifi, and was a programmer at Apple, AAPL, and Microsoft, MSFT. Shin helped to establish and drove South Korean web-based business stage Ticket Monster, as well as startup hatchery Fast Track Asia. Quan tweeted on 11 May that the main way ahead will be to retain the stablecoin supply that needs to exit before $USD can begin to repeg. It is basically impossible to get around it. We propose a few medicinal measures to help the stake system to ingest supply. This incorporates underwriting a local area proposition to increment printing ability to retain USD quicker. With the ongoing on-chain spread, stake pressure, and USD consume rate, the stock shade of USD, i.e., awful obligation, ought to keep on diminishing until equality is reached and spreads start mending, Quan tweeted. Normally, this is for an extreme price to USD and Luna holders, yet we will keep on investigating different choices to get more exogenous to the biological system and lessen supply overhang on USD. As we modify USD, we will change its system to be collateralized. The authority Terra account on Twitter added that the objective was to eliminate awful obligation from USD course. TFL proposed consuming the leftover USD held locally pool, will consume the 371 million USD on Ethereum, and mark 240 million Luna to stop administration assaults on the organization. By debilitating designations. The blockchain continued creation under 2 hours after the fact. The effect of the Luna crash on the cryptographic money markets past Terra will set aside some margin to work out. The experts at Saxo